Good morning, everyone. Here is a brief update on the current state of the markets, focusing on the US dollar index, crude oil, and spot gold. Let's get straight into it. Let's talk about US dollar. So, on Tuesday, the US dollar rose slightly with the US dollar index returning to the 100 area during North American trading session. The index rebounded from the recent 3-year low under oversold conditions, but market sentiment remains fragile. Although US dollar rose against major currencies such as the euro, the market remained cautious due to the continued uncertainty caused by US President Trump's tariff policy changes. Traders are also digesting mixed comments and weak economic data released by Fed, all of which occurred in the volatile trading on Tuesday. The US dollar index has continued to fluctuate below the psychological barrier of 100 since the beginning of the week. The lowest in 3 years, the instability of trade policy is inconsistent with previous situations. The White House has imposed aggressive tariffs on trade and then wavered, threatening the supply chain of key US industries, causing global funds to sell assets, stocks to fall, and US Treasury yields to fall. The US dollar has decoupled from US Treasury yields. The US dollar fell last week while US Treasury yields rose this has triggered market speculation that investors are moving investments out of the United States because they are worried about the durability of tariffs and their impact. The US dollar index, despite a small rebound on Monday, fell back again before the close, and technicals of the daily chart are still fragile. The moving average continue to send a sell signal, while the 14-day RSI is oversold at 2955. The index trend remains below all major moving averages, especially the key 200-day simple moving average at 104.76. Short-term indicators such as 10-day simple moving average also maintain a downward slope at 101.85. Therefore, the resistance level can be first considered at 100.16 area. This is followed by the key 100.62 and then further upwards to challenge 101 level. The technical background suggests that the decline of the US dollar index may be over yet, therefore, the initial support level appears at 2025 low of 19.02, then 1998.52 and 98.35. Today, you can consider shorting the US dollar around 100.3, stop loss can be 100.4, and target can be 99.5 and 99.8. Let's talk about crude oil. On Thursday, international oil price rose slightly as market participants were evaluating the impact of tightening global crude oil supply and the latest US tariffs on the global economy and energy demand. At the beginning of the week, oil prices rebounded slightly due to the exemption of some electronic products from US tariffs and data showing that China's crude oil imports rebounded sharply in March. But the gains were limited by concerns that the trade war could weaken global economic growth and suppress fuel demand. US President Donald Trump said on Sunday he would announce import tariffs on semiconductors in the coming week, adding the flexibility would be maintained for some companies in the sector. Meanwhile, data on the Monday showed that China's crude oil imports in the March rebounded sharply from the previous 2 months, up nearly 5% year on year, boosted by Iranian oil and a recovery in Russian deliveries. However, Brent and crude oil have fallen by about $10 a barrel since the beginning of the month, and analysts have cut their oil prices forecast as a trade war between the world's two largest economies intensifies. Oil prices will decline at the end of this year and next year due to the rising risk of recession and increased supply from the OPEC Plus organization. Crude oil futures prices rose slightly to start the week, but still hovered in a weak technical range of 59.06 to 63.64. This narrow range indicates that the market lacks a clear direction and could break out in either direction in future. Crude oil prices remained range bound this week, lacking clear directional momentum. The outlook remains bearish until a breakout of 63.64 or a clear demand stimulus emerges. In the short term, downward pressure is gradually increasing. If oil prices continue to break through 60 if oil prices continue to break through $60 and 59.06, the sell off may accelerate. The next major support range is 57.8 to 57.0. This area may play a supporting role. As for the upside, the first resistance can be focused on 62.81, and the next major resistance is 63.64, the high of last week, and 64.2, axis of the weekly chart down channel. Today, consider going long on crude oil around 60.78, stop loss 60.55, and target 62.3, 62.4. Let's talk about everyone's favorite, which is gold. On Tuesday, gold traded around 3230. Gold prices fell at the beginning of the week and fell back after hitting an all-time high of 3245.5 earlier in this session. As risk sentiment improved after the White House exempted high tariffs on smartphones and computers, however, although risk trading has led to a correction in the gold prices, the current environment is still favorable for gold. Tariff exemptions have weakened some of the safe haven demand, but trade uncertainty, a weak dollar, and falling treasury yields still provide support. It is worth noting that the US 10-year treasury yield fell 12.5 basis point to 4.368% on Monday, and the US dollar index experienced an extreme decline of 4 standard deviations in the past week. These factors together weave the complex fundamental of gold. Goldman Sachs has taken the lead in raising its gold price forecast to 3,700 at the end of the year, and data from the World Gold Council shows that China's gold ETF fund inflows have surged. Analysts generally believe that policy uncertainty be- when policy uncertainty becomes the elephant in the room, the monetary attributes of gold will shine again. From a technical perspective, the trend of the spot gold continues the recent strong pattern. On the daily level, gold prices have continued to run along the rising channel since breaking through 30,000 per ounce. Although there has been a small correction the, during the day, the overall bullish trend has not been damaged. The current price is firmly above $3,200 ounce, which has become a psychological and support level in the short term. In terms of the moving average system, the 5-day moving average and the 10-day moving average continue to maintain a gold cross state, indicating that short-term momentum is still bullish. If the gold price can continue to stand above 3200 area, the bulls may further challenge 3245.50 and the 3250 area, or even 3300. At present, the support strength of 3200 is relatively strong. If the gold price falls in the future, it will usher in a new wave of technical adjustment to $3175.6 and the 3185 support area below this level. 3150 may play a supporting role. Consider going long on gold before 3225. Today stop loss will be 3220 and target will be 3245 3250.